Marc, are you optimistic about opportunity in 2021?
Well, first of all, thank you for that introduction. I love that. Very few times do people talk about Clark, but yeah, I am actually pretty optimistic. I think for us, what you are seeing is it's a little bit of what you just talked about. You're seeing that there are problems in a number of places, but there's also growth. So for us, really what we're finding is opportunities where we can invest in situations where people need capital, and we're providing that capital, but we're doing it at a pretty steep price.
When you clear a balance sheet out, you are now clearing within the reality of a Fed at the zero bound. Has the Fed distorted your part of the hedge fund world?
It actually has. What's ended up happening is it's made it easier for companies to borrow money. So anybody who could borrow is doing so. But then what it's done is the reverse. If you can't borrow, then you've got to deal with folks like me. And if you're doing that, we're able to charge 12, 15%. So it's kind of odd, a zero rate environment, yet we're still charging 12 to 15.
I love that you say, otherwise you've got to deal with me, and you don't want to deal with me. Marc, I do wonder, when you look at distressed investing going forward, how much of this is simply who knows bankruptcy law best? And I ask this of you, knowing that you did clerk for a bankruptcy judge in the Southern District of New York. So is that really what this game has become?
I think you've got to understand bankruptcy law, because what ends up happening now is you're going to have a number of restructurings. But I would tell you the most important part today is really understanding the balance sheet of a company. That if we're going to lend, are we, super secured? Are we senior? Where are we in the capital structure? Because things can change on a dime, and you want to make sure that you're covered. So I would tell you the capital structure is going to be a little bit more important, but you better have that legal background.
Well, embedded in this is the assumption that perhaps, or my presumption, that recoveries are not going to be as robust this time around, given how much debt has been incurred and given some of the erosion with some of the covenant light loans that we have seen. How much lower will recoveries be, and how much fiercer will the battle be over who gets what?
Oh, I think recoveries will definitely be lower, and I think the fights are going to be absolutely insane, because everybody's going to be fighting over a smaller pie. So that's why the focus is really where are you in the capital structure, but you're going to have lower recoveries. It's hard for you not to, mainly because of what you said, which is that people have taken on more debt, and there's less equity value there.